Hi, this is me Amina. Welcome back to my channel. Here we talk about personal finance, budgeting, and other important topics in life. And today I want to talk about my experience in investing into stock market as someone who is a finance graduate and spent 5 years in the corporate world. Let's get going. I started investing into stocks 6 years ago. I was 22 years old. I just graduated from my finance degree. Just landed my first ever job. I was living with my brother and his family, and my salary was $600. Every day before I started investing, I was thinking, why am I not using all this finance knowledge that I have into building my own portfolio? Up until the day I actually decided to start investing. So I started investing with just $10. And I remember I invested in one of the largest banks. So I invested, let's say today, tomorrow I checked my portfolio, it was green. So the price of it was going up. I was so happy. So I monitored it for a couple of days and the price of the stock was going up on a daily basis. So I was like, okay, I gained confidence. So I invested a little bit more. I monitored again, I invested it a little bit more again. I bought more and more. And that month, in the first month when I started investing, I invested $100 in the same stock. Very proud of myself. I was very happy to see this $100 because for me it meant that I didn't spend it elsewhere. Not just that I saved it, but I also built my own portfolio. I mean, a portfolio is a too large word to say for $100 one stock. But anyway, I decided that this is the time I really want to start building my own portfolio. But I knew the concept of diversification, and I knew that I shouldn't be putting all my eggs into the same basket from my finance degree. And did some research and I realized what I want to do. So I picked a couple of large ETFs. I picked a number of large companies that were paying dividends because this is what I wanted at the time. I opened an Excel spreadsheet, calculated how much I'm spending a month for my mandatory expenses, for my lifestyle, for my extras. I realized that there is $280 a month that I can save and invest. So from that day, every month on my paycheck day, the $280 would directly move to my investment account. That was fine for me because remember, this was 6 years ago. I was a fresh graduate. This was my first ever job. It's okay. Every month, these $280 were distributed among these ETFs and these companies. Sometimes I was doing rebalancing, so bigger portions of money were going into a specific company. Sometimes they were going into the specific ETF. 1 year later, my salary increased from $600 to $700. After this increase, I did not increase my spendings. I increased whatever I was investing. And I was still living with my brother and his family. This is important for the context. I was increasing my investments. Fast forward 2 years, I had 2 different portfolios because I was diversifying with different currencies, and both portfolios together were around $5,000 or $6,000, which was a very big money for me at the time. Sometime later, I had this opportunity from work that I could relocate to another country. So this was an opportunity for me and for my career because I knew this will boost my career. I knew I had all these funds in my investment account, and I decided that this is the time for me now to liquidate this money, invest it now in my relocation because this is better for me in the long term. I liquidated the funds. I sold everything that I had. These funds helped me to relocate and use this opportunity. Very important to mention that if 2 years and a half I did not have the mentality of let's start investing, and if I didn't consciously try to save and invest, I wouldn't be able to relocate and use that opportunity for my future. This is what I like about investing. So I moved countries. It took some time for me to settle. I settled and now I was back to square zero. I had no money. That was the time when I had to start building up my emergency fund. So slowly, I built up my emergency fund. Once the emergency fund was there for me, I decided, okay, now this is the time for me to start investing again. So in a little bit less than a year, I had in my investment account around 8,000 euros. The strategy was the same. I picked a couple of ETFs and a couple of companies and I was investing. Then I needed these 8,000 euros. So again, I went back to my portfolio, I sold whatever I had, and I moved my funds into a different type of asset. Essentially, what I'm trying to say is that investing is a tool for me to save and plan for the long term. In the past 6 years of investing experience, I also have experience in investing in cryptocurrency. I'm not sure if we can call it investing. I quickly realized that this is not for me. Why? The decision making of whether to get this stock or the other stock or a certain ETF comes from the fundamental analysis. For example, what goes behind this ETF? How many companies? What are the companies? How are the companies doing? The same as when you are buying a stock. You are asking yourself, what am I buying? What is this company doing? How is this company doing? It's called fundamental analysis. This is called looking at financial statements. There are many more factors that could affect the share price of companies, but fundamentally, we usually look at financial statements. When it comes to crypto, I still don't know whether the price is fair or not. How is the price of crypto determined? I failed to find one consistent factor that can lead to an increase or decrease of its price. I still don't know. Secondly, it's very risky, it's very volatile, you can lose a lot of money and you can gain a lot of money. This unstable behavior, it's definitely not for me. I am not willing to spend an entire day monitoring the volatility and the prices of cryptocurrencies to make a decision whether to buy now or to sell, because I still have my own full-time job. I did not like the experience of buying cryptocurrencies at all. But I would like to hear your experience with crypto. Let me know down below. Maybe you're the one who made $1 million out of it. And you might tell me that you hear all these stories that someone made $1 million, but we need to also realize that we always hear a successful story. We never hear that someone lost $1 million, someone lost all his savings, someone lost everything in crypto. I haven't heard my personal experience, and trust me, I didn't lose that much. Maybe a little bit, and I still don't like it. Let me know your opinion about cryptocurrencies down below. And now it's time to talk about my mistakes and lessons that I learned throughout my investing journey. I would like to mention 3 mistakes that I made, and hopefully you can learn from them and don't make them yourself. The first mistake is that I ignored fundamentals when I saw the low price. Despite having bad fundamentals, still went and bought some shares of the company, not realizing it was cheap for a reason. I am ashamed to admit this. I ignored the fundamentals, having a finance degree. The specific stock that I'm remembering now, it was in negative for a very long time. It was a hype stock, and so I couldn't look at it anymore. At some point, I just sold it. I realized my loss. The second mistake is that I ignored the fees of the broker. When it comes to us, retail, individual, small investors, we do not invest large amounts of money. For us, fees are very important because let's say we're investing $10 and there's a fixed fee of $3.75, let's say. This is almost 50% of that $10. Over the long term of investing, it's going to accumulate into a very large proportion of what you pay to the broker against what you invest. The last mistake that I would like to mention is me being an emotional investor. Yes, those situations happened, and I realized that those situations happened only for my experimental stocks. During panic, I never sold any of my ETFs. I never sold any of those large companies. Only sold the ones that I wasn't sure about. So it just comes to show that we need a certain strategy that we have to stick religiously to. This is one of the lessons, by the way. Okay, since I already mentioned one of the lessons, let's move to the lessons. Stick to the strategy. You should have a strategy. You should know what you want to invest in, and you shouldn't be falling into the market hypes or trends. Just stick to the companies that you believe in and invest. The second lesson is that always look into the fundamentals of the company. What does that mean? Try to see how the company is doing. Check their financial statements. How much they're making. Do they have liquidity? Where their assets based? What are their long-term goals? Make some basic analysis. And if these things are okay for you, then you can invest. And the final lesson before I wrap up is try to compare different brokers. Try to see the fees structure. Especially check the fees of the certain operations that you would like to get engaged in and choose the one that is most suitable for you. So that's it for mistakes and lessons. And the last thing before I wrap up, what I would like to say is that me personally, I love the experience of investing. It makes me think about my budgeting. It makes me think about my long-term planning. It makes me think about my goals. Allows me to save today and invest today to have more tomorrow. So although currently I do not have any active portfolios, I hope one day, very soon, I start investing again. Anyway, thanks for watching and bye!